Okay, this is a shout out to all my trucker friends, or all of the truckers out there actually. For tax purposes, there are three scenarios. The first scenario is an owner operator. Now, this person owns the vehicle or leases the vehicle, the truck that is. This person pays the plates, the insurance, the fuel, the repairs and maintenance. That's an owner operator. You can be incorporated, sole proprietorship, partnership, whatever. It doesn't matter. You can be. That's an owner operator. For HST purposes, you should and are required to be an HST registrant because you technically have to charge HST. The good thing about that is HST is zero rated, which means it's a 0% HST you charge on that. But the great thing about that is you get to collect the input tax credits. That means you get to collect all the HST on the fuel you pay, for the repairs and maintenance and the supplies that you use. And in my experience with my clients, it's kind of worked out to around $2,500 every quarter. So that's pretty good. Now, that's the scenario. And then of course your income ends up being your income less your expenses, whether you're a corporation, partnership, or sole proprietorship. It all kind of works the same. The only difference is there's no difference other than you get to also amortize the vehicle itself. Okay. Okay. So now for the paid employee. So, you know, you're going to have your CPP, your EI, your taxes already deducted, but you can claim some expenses as a truck driver, and that would be filed on a T777 when you're filing your actual T4 as well. So the T77, you would be putting down any meals, you are entitled to your meals, any supplies you needed to purchase so that you could drive the vehicle or to earn that income. Some things like safety shoes, or maybe harnesses that you may have needed, even like maybe a trolley, whatever it is that you need to do your job, that you have to spend the money on to do your job, you can claim as well, and that'll deduct how much money you've made, and then that'll be just like a regular employee tax situation. Now, this is the most important one because I think this is where we most often get it wrong. There is another one, it's called a self-employed person offering driver services. So what that means is you don't own the vehicle, you don't pay the fuel on the vehicle, the repairs and maintenance, you don't pay for the plates, you don't pay for anything on the vehicle. All you're doing is providing services of driving. So you're driving to wherever this person or this company needs you to go. Now, that being said, you are required to be an HST registrant, which means that you need to charge HST on your services. But that also means you are entitled to your input tax credits, but they're not going to be as much because you don't have very many expenses to that. You'll have some meals, you'll have maybe a couple of things like safety shoes, the same thing, then you can deduct the input tax credits on that. But then the money you make less your expenses determines your income, and whatever structure you are, sole proprietorship, partnership, corporation, then you file your taxes accordingly. But you usually end up having to pay HST at the end of the year or quarterly, however you're determined to be. And that usually probably works out to around, well, I guess that depends on your income, right? So if your income is $100,000, it's probably going to be around $13,000 of HST. So keep those things in mind when you're making a decision on what type of truck driver you'd like to be.